did that bullish order block come from? Well, it came from this balance area after we got the bottom edge rejection. Remember we discussed this pattern before where we get a rejection of something? So they rejected 39 handle and then they balanced at 39.50, 39.60. So that's a good thing to be able to mark. When you've got that rejection, you've now got this bullish order block area resting in this price print on your screens. So you've already got this storyline, the narrative, already forming in the background. As we come down into this area, we can already start to recognize the compression phase of an accumulation. So just purely based on market structure, one would have already have been inclined to be thinking to themselves, this looks like a bottom edge. Anybody disagree with that so far from the structural point of view? In terms of filling out your structure, you would obviously have had this as your capper price. And that capper price, of course, translates to a change of behavior at the background. So that changes behavior there. And we now have that change of behavior in the background. If you're using that as your structure, then of course we've now got two target prices. The original structure had the target price in this area here. And you can see that the target price for that original structure took us up into this area here, which didn't quite reach. The second target, of course, is the large bracket we have in the middle here, and that gives us another target price, which takes us to a target price of this area here, which did trade out. So their charts are up to date at this stage. This is what we've got to remember, guys. If every time you look to do your structure and it's after all the events have taken place, it's not as much. It's almost no use anymore. The events have already taken place. So what we've got to try and do is we've got to try and get this structure on your charts live as it's happening. Hold on a second. So we've got to try and get ahead of these events as it's happening. Now, why would we have been interested in a buy trade? That's the big question, of course. Well, the key concept at the moment is what? What is the key driver of the markets? Is it the rotations between the specialists? Is it the rotations anywhere else? Is it the rotations? No, it's interest rates. It has been interest rates ever since the Fed moved into that tightening cycle, right? So if it's interest rates, then we want to focus our attention on trying to make sure the interest rate storyline is lining up with it. Now, we've got a way of expressing interest rates in terms of equity prices, and that's NASDAQ over S&P, of course. So if we take a look at NASDAQ over S&P, because obviously NASDAQ goes up if interest rates, in relative value terms, if interest rates are expected to dove down a little bit. Let's take a look at what was happening prior to Powell and see if you noticed any subtle changes. Did you notice any subtle changes prior to Powell's commentary? It's not really that subtle, is it? It's not really that subtle. So all of a sudden we can see there is a big ramp up in buyers of NASDAQ. Now it's not necessarily people buying NASDAQ, but it's people buying NASDAQ in preference to the S&P. Coming into a Powell testimony, people are buying NASDAQ in preference to the S&P. Well, that's a big gamble, isn't it, Ab? Would you not agree that that's a huge gamble, Mike? Coming into a Powell testimony, generally people would generally lean towards buying dividend stocks. You know, it's a safer bet, right? Buying utilities, they're still going to go up if Powell speaks, but they're not going to be going down by much if Powell says the wrong things. So for people to actually physically buy NASDAQ, going into a Powell comment, you've got to be saying to yourself, well, that's interesting, that's exciting, that's bullish. At that point in the charts, that really is a very, very bullish sign. Now, it wasn't just, bearing in mind this is a 30-minute chart. 30 minutes, 1 hour, 30, 2 hours, 2 hours 30 of bottom edge buying on the NASDAQ, guys. 2 hours 30 of bottom edge buying. Now, it's not just a bottom edge, of course, it is the bottom edge. It's into the prior lows, it's into this bullish order block it has an awful lot going for a bottom edge, doesn't it? Let's take away that simple, easy to recognize narrative and say, well, they're playing lower interest rates. They're playing not necessarily lower interest rates, but they're playing a dovish Powell. I would not buy the NASDAQ unless I was going to be playing a dovish Powell, correct? I'd avoid the NASDAQ like the plague if I had a hawkish Powell. So that's something you automatically go to. So if Powell is going to be bullish, hawkish, aggressive, I'm going to avoid the NASDAQ like the plague. So when you see the NASDAQ being aggressively purchased against the S&P, you're starting to recognize a storyline to me that seems almost a given, that now the market is sensing this change in the dynamics of what Powell's going to be saying. Now, obviously, we can investigate that question further by investigating some of the other narratives, looking at some of the rotations, because obviously if we see some more aggressive rotations, then we can start to recognize some other things. Now, that just simply didn't show up as much. It was there, but it wasn't showing up as much. You see it? It's relatively flat to bullish off the bottom edges. Relatively flat to bullish off the bottom edges, but it's also bearish off top edges. So that's the XLK, XLY, XLP, XLU narrative. Now, I wouldn't be surprised at that, to be honest. And why would I not be surprised? Because if you're not sure what's going to happen, then of course people are just going to hedge their bets by buying a bit of everything, right? It's going to be a nice balanced portfolio. So that's kind of what seems to be happening in that situation. Let's take a look at what the beta zeros thought about the hedging aspects of the equities last night. If we look at the beta zeros, they were actually very bullish at the cash open, weren't they? You see that? The beta zeros were actually really bullish at the cash open yesterday, coming into the first hour, and you're looking at that cash open and saying, wow, the beta zeros really have a handle on this. They're buying equities, not selling equities. So that's obviously something you're going to be looking at, and you're saying, well, if they're going to be up here, that's interesting. Because for that to go up there, they must have sold this product here, right? They must have sold that product, which means, how do you hedge out a sold BTAL? How do you hedge out a beta zero? You buy stocks. That's how you do the hedge, right? That's what you do as a hedge trade. So if they sell the purple line, in other words, if the purple line goes up, they're going to be buying equities as the equity goes down into that phase. It's very much like this kind of phase here. When this opened massively down, you'd obviously be instantly thinking that's going to be a sell-off day, and it was a sell-off day. It's going to be really interesting to see what they make of today's gap open, to see if they still feel the same way about the bullishness, or whether they're starting to go long BTL, which obviously is going to start putting a sell into that purple line, which means obviously if they're long BTL, they must be selling stocks at higher prices as part of that beta zero hedge. So this was a very strong piece of evidence into yesterday's open, maybe not so much into Powell's comments. What else? Well, our old friend, let's take a look at the volatility markets and see if we can start to recognize any elements of the, well, in fact, let's go back a step whilst we're still on the other bits and pieces. Let's take a look at IWM against the dividend stocks into the bottom edges here. Now take a look at this. Now this is the dividend stocks, one of the safest bets you can make in the stock market, versus growth stocks like IWM, IWO, and JIG, right? JIG, growth stocks, aggressive growth stocks, and aggressive growth index. Look how bullish they were in the last 3 days. You agree with that? Do you agree they were bullish? Do you agree that the evidence was all over the charts here? So they haven't went bearish at all, have they? So from this point here, there hasn't been a new lower low, has there? From that point there hasn't been a lower low. And therefore, from that point there, as you came into yesterday's open, that point there was rising, and when it opened, it was way up here. Look at the difference. That's where the price, that's where the rotation is. That's where the price is. It's the exact opposite sides to each other. It's exact opposite sides to each other, isn't it? So there's this massive bullish break of this balance area from yesterday. And obviously that puts us into a strong bullish trend market. Strong bullish trend market. So we've got the macro divergence lows, and we've got the aggressive right-hand edge developing after we break structure here, around about 14:30 at the cash market open yesterday. And that puts us into a very aggressive bullish buy-side bottom edge type market. You don't often get aggressive bullish at bottom edges. You usually get aggressive bullish at top edges. You know what I mean? Ken Barabin? Ken Barabin. What is this? IWM, IWOGIG as a relationship to FID, NOBL, and REGL. It's the growth versus dividend narrative. Growth versus dividend narrative. What else? Let's take a look at Vanguard. Let's see if the Vanguard boys were on point here. Did the Vanguard boys have a view on this market this morning? Did the Vanguard guys have a view on this? What do you think? Very bullish again, weren't they? Very bullish again. Thank God for Sebastian. I think it's bullish at least. So the Vanguard guys, very bullish into Powell's comments last night. So again, incredibly obvious. How many things have we now looked at that are bullish? We've now looked at rotations. We've looked at XLK, XLY, XLP, XLU, which was kind of neutral. We've looked at the beta zeros, which were bullish. We've looked at the Vanguard guys, which were bullish. We've looked at the Russell and growth against dividends, which was bullish. Pretty much everything's bullish, isn't it? Pretty much everything is bullish. Unbelievable. We've looked at the NASDAQ S&P, bullish. IWF, IWD, bullish. It's crazy, isn't it? Volatility, bullish. Crazy. Everything was bullish going into this rotation. Everything was bullish going into this rotation. Even the negatives were bullish. Even the negatives were diverging into this rotation. So you can see it wasn't difficult to recognize it, guys. It really wasn't difficult to recognize it. When we look at the hedging ratio, the S&P against bonds, bullish going into yesterday's data. People were buying S&P and selling bonds. People were buying S&P and selling bonds, right? So they were obviously, that was the story. And that's it. Boom. Straight up. There's nothing difficult about any of this, is there? But obviously there's a confidence thing that has to be traded. There's an idea that you've got to have that level of confidence to go ahead and take the deal, take the shot when it's that crystal clear. Take the shot when it's that crystal clear. But because that was a lot of money, guys, that you left on the table if you never took it. And yet every single major indicator we have was telling us to be long into that bottom edge last night ahead of Powell. Every single last indicator we had was telling us pretty much to get long into Powell's comments last night. You can't make it up, guys. Check it for yourself. Take my word for it. Check it for yourself. You'll see exactly what was diddling in the background. It was phenomenal. Phenomenal.